Hey everybody, it's Brian Shannon from AlphaTrends.net. Today's Friday, the 30th of October, 2020, and we had a pretty rough week for equities, down about 5% on average. Bonds were actually down too. I didn't color that properly. But, coming into this week, I thought that it was more likely we would be able to recover and move higher. Obviously, the market had different opinion of that, and that's why I don't trade based on guessing games. We wait for the direction of the 5-day moving average to flatten out and turn higher. We have been on strong defense as it's been below the declining 5-day moving average. It's easy to look back and say woulda, shoulda, coulda in terms of selling short of that, but the primary trend had been higher, holding that 50-day moving average. Well, obviously things can change quickly, which is why you have to have an exit strategy and not just blindly hold on as the market declines. The most important level that we came down to today was this volume weighted average price from the May low. And you can see that that had been important here in June twice, and then again last month and now. What I had mentioned on the Twitter today was that this is a prior important area. This band of what had been resistance a couple of times turned support in July and then again in September. What I'd really like to see happen would be a slight undercut of this low from September, and then perhaps a turn could come higher. But again, next week we have the election, so I think that there's just no point in making heavy commitments to either direction, especially after this decline. You don't want to be or selling short after the market has dropped that much. So I'm glad to have been on vacation this week, and the Nasdaq also got hit pretty hard here as well. That similar volume weighted average price from the May low would bring this market down just a little bit further to about 267-ish. And as I said with the S&P, I'd prefer that we slightly undercut this prior low and take out some lows. In the tweet that I had mentioned today, I said that there's often a lot of uneducated stops below this level. And someone asked me, what do I mean by uneducated stops? The point is, we've been in a decline here for the last 3 weeks below this declining 5-day moving average. I've been pointing this out each and every day. And in fact, on Thursday, we rallied right up to it. And then, of course, today it failed from there. But the point is, why would you set a stop way under this low after the market has already declined from 297 to 260? That's a huge area that you don't want to be trapped underneath that level. The Russell 2000 had been a relative outperformer recently, and it's back to being a dog, back underneath the declining 50-day moving average. There's no reason to be involved in any of these markets while they're below declining 5-day moving averages. In here we see a 30-minute time frame. The semiconductors, similarly, I was looking at the possibility of a turn here, what it might look like. But as soon as they start to gap down, the market tells you, no, that's just a scenario, and you don't trade it until you have actual price confirmation of your thesis. We look at prior levels of resistance as potential support areas. We look at Fibonacci levels. We look at simple moving averages and volume weighted average price levels. And as you know, I always mention the volume weighted average price levels, but I never say that's the place to buy. I call them levels of interest. And what that means is we want to look for actual evidence that the buyers are gaining control on a shorter term time frame. And you can see that simply is not happening for any of these markets. So there's no reason to be a buyer unless, of course, you like losing money and playing that silly game of buy the dip. One of the stocks that people have been talking about, and I was pretty vocal about, tweeting about it on this gap lower, was don't buy it here on this gap lower. Just because it has been a stock that's bounced in the past doesn't mean it will again. And a gap from one, now it's down basically 50% here from this move lower, and it's still showing no signs of support. It's below the volume weighted average price from the IPO, and this is Fastly, FSLY. The fact is, while it's below a declining 5-day moving average, there is no reason to buy these stocks unless you like to lose your money, basically. The financials, again, these guys are dogs. I don't know why I even look at them truthfully. I guess I do know why, is because other people like to hear about them. But to me, they're about as interesting as gold. They just underperformed the financials, that is. They're in this bigger range and continue to be a waste of time. Apple, we were looking at this one. I've been trading this one, successfully the last few weeks as it was above the rising 5-day moving average, and we got stopped out of our last bit in alpha trends right here. And it seemed, on this day, it seemed like, oh, maybe we shouldn't have sold it there. But guess what? We have a pattern here. It's lower highs and lower lows with a declining 5-day moving average. And just like any stock, you don't want to buy them while they're below a declining 5-day moving average. That's all for me for now. I'm not going to point out any stocks of interest for next week because we have that election. It can change anything. Hold on to your cash. Wait for things to become easier. You don't have to be involved every single moment. Have your powder dry to take advantage when the better situations present themselves to us.